This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on January 25th, 2013. Our time is 8:35 Mountain, 10:35 Eastern. Our radio show runs on QR77 in Calgary, 630 CHED Edmonton, and News Talk 1010 in Toronto. If you ever miss a radio show, obviously we're on the radio. We are online at Harold's websites, HESradio.com, rarecoloreddiamonds.com, and you can be a part of our podcast as well through iTunes. The show can be listened to on your iPod, your iPad, even your smartphone. It's all there for you. The show is portable. And we should mention that to connect with the company Harold recommends you use to invest in precious metals, worldwide precious metals, WWPMC.com, their telephone number, 1-866-623-2002, rarecoloreddiamonds.com, telephone number 1-800-432-1022, and we have to remind you, hsfineauctions.com. Next auction this Wednesday, January 30th, 8 Eastern, 7 Central, 6 p.m. Mountain. We'll talk about the auction and diamonds a little later in the show. This week in the United States, the debt ceiling was raised short term. It seems the Republicans are rolling over for the he's the continuing U.S. President, Barack Obama, newly elected. They are rolling over for him, and they've done a short-term deal. They've kicked the can down the road, similar to what they did when it came to the fiscal cliff. More talk about currency wars this week. The Bank of Japan doing something. Quantitative easing as of January 2014. They're going to be trying to have 2% inflation. They're in deflation right now, going to print money, buy bonds. The Fed in the United States, their bond buying balance sheet is now $3 trillion. They're buying and printing $100 billion a month. The QE continues. It's very bullish for hard assets, gold, silver, diamonds. And to start the show, before we get to Harold, there's a quote from Michael Pinto I wanted to get to, and he says, "When two central bankers launch an all-out currency war, who will win? History shows us the answer is clear. The absolute losers will be the middle class of both countries, and the winners will be those who have the intelligence and foresight to eschew financial currency, fiat currencies, and the sovereign debt they support. With so much monetary madness crossing the globe, it isn't such a shock to learn the United States Mint has sold out of 2013 American Eagle silver coins. Exchange-traded products are now at $20.1 billion worth of silver, and central banks are buying more gold than they have in the past century. Since central banks are more determined than ever to destroy their currencies, it seems more important than ever for investors to store their wealth in alternative currencies that cannot have their value inflated away. And that means increasing money flows into both gold and silver. That from financial expert and analyst Michael Pinto. And Harold, we are hearing, and get the newsletter this week. I really encourage people to get the newsletter from Worldwide or Herald. We have a free weekly newsletter we send out via email every week, because the bullishness towards silver and gold from some of the top analysts out there is very, very strong. And we're hearing reports all over the world of strong buying in gold and silver. And Harold, it is interesting, the paper market, you have people pushing the paper market around, but the physical market is very, very strong.
It certainly is, and it's confusing for most people. It's confusing for us at times, but the fact is that they are two totally different markets. And just judging by what we've heard over the last few weeks with Germany going to get their gold and it wasn't there, and the banks possibly leasing this gold out several times, the things that are going on behind closed doors are bordering on illegal. How do you take a country's gold and use it for your own benefit to make money? It makes no sense to me. But the gold market is down 880 as we're taping the show. It's trading right now at 1659, and silver's down 38 cents, trading at 31.34. Just to show you the difference between the futures markets and the actual physical market, just because gold didn't break 1,700 on 2 attempts earlier in the week, the market sold off on profit taking. And that's all it could be, because we know that there's a direct correlation between gold and the U.S. dollar. And when the U.S. dollar is weak, gold goes up. That's why gold's gone from $250 to $1,900. At this point today, as we're taping the show, the U.S. dollar is down by 25 cents. By 25 points. It's at 79.72, but gold is down 8.80. And again, in the futures market, they just basically took profits, and because gold didn't break above 1,700. 1,700 gold is not even that important of a number. It's only a short-term resistance level. Once gold broke 1,700, the next major level of resistance is 1,800. That's a very, very important number. The two most important numbers for gold at this point on the upside is 1,800 gold and then 1,920. A break above both those two levels will send gold to substantially higher prices, and it's very, very possible that this year gold will break that 1,920 level and go to 2,000 to 2,200. The silver market needs to, number one, break 3,250, which it couldn't do this week. So again, it's sold off about $1 lower. But 3,250 again is only minor resistance. We need to break 3,250 and then go to $38. $38 silver, when we break that, will take us to 44 to 50, and obviously 50 is the highest price that we've seen in silver ever. Now, the interesting thing is that when silver hit $50 and gold hit 1920, the exchanges where gold and silver are traded, they decided to slow down the price moves, which I believe is illegal. Many other people do, but they did it anyways. And what they did is they really held the gold and silver market back by raising the margin requirements. What that means is that gold trades in the futures markets in New York and in London and different areas of the world. But let's just talk about New York at this particular point. So gold trades, and so does silver, on the COMEX exchange in New York City. And people all over the world will trade gold and silver based on whether they're bullish or they're bearish. And the thing is that to trade a futures contract in silver is 5,000 ounces of silver. So if silver's trading at $30 an ounce, and a contract in silver, just one of them, is 5,000 ounces, multiply 5,000 ounces times the price of $30, and you get 150,000. That's how much the silver contract is worth. It's worth $150,000, and you have to put up $16,000 in order to control $150,000 worth of silver. Every dollar that silver goes up or down, you make or lose $5,000. However, back when silver hit $50, the margin requirements were down to around 8,000. What they did is they made it so expensive to trade silver that most speculators couldn't afford it anymore, and that's why silver dropped from $50 to $26. We're now back up to 31, 32 because silver is still extremely bullish. The thing that tells me that silver is bullish is the cash market, because last week we read the articles that the U.S. Mint is totally out of silver. Well, how in the world does that happen if there's an abundance of silver? If there's an abundance of silver, you shouldn't be running out, and the price of silver would be low. But the fact is there is no silver. There's hardly any. And the fact is that silver is not only used in the minting of coins and silver bars for investment purposes, it's used in hundreds of different things, mostly in computers and in the medical field. So there's a tremendous need for silver, and silver should not be trading at $31 at this point. In fact, let's look at this logically. When gold in 1980 hit $800, its all-time high, silver hit $50. That was in 1980. In 2011, gold hit $1,920. So it more than doubled from the highs that we saw back in 1980, but silver didn't. Silver only went back up to $50, which was surprising because if gold doubled in price from the all-time highs, so should silver. Silver's just as bullish as gold, and silver should have been trading in and around the $100 level, but the highest price it hit was $50. So it shows you at this point here, in the futures markets, they can play with these markets. They can bring it up, they can bring it down, they can do whatever they want. But over the longer term, the trend is always your friend, and the trend for gold and silver is tremendously higher. And Randy's 100% right. If you read the articles that are in the newsletter this week, you have never read articles as negative on the world economy as you're going to see at this particular point. We are in the most dangerous times that we have ever been involved in. Most of us are not old enough to have gone through the Great Depression, but we are in trouble. There are markets that are so risky, like the derivatives market. It's a quadrillion-dollar market that is so misunderstood, it's unregulated. And that's what brought down Lehman Brothers back in 2008 when the whole financial debacle happened and the markets plummeted. In the quadrillions of dollars, the banks and brokerage firms that have invested in these derivatives don't have a clue in most cases how to liquidate them and get out of them. And the first attempt that they had, which was in 2008, we saw what the results were. Almost a total destruction of the financial system as we know it. So there is so much negative news out there as far as the economy, mostly the U.S. economy. We don't hear a lot about Europe anymore because, again, they try to keep it out of the news, but Europe has not gotten better. Greece is still in terrible trouble and on the verge of bankruptcy, as is Italy, Spain, Portugal, Ireland, and other countries like that. We've never seen a time when we've been in this type of financial trouble except for the late 1929-30 period when we had the Great Depression. The point that I'm making is that don't get discouraged by the day-to-day movements in gold and silver because it's just the way it's traded in the futures markets at this point. There's no doubt that there's a shortage of gold and silver. Otherwise, the banks would not have stolen Germany's gold and double and triple leased it out in order for them to make money, and now going to take 7-8 years to return that gold at probably substantially higher prices. They're going to have to go back into the market and buy this gold, and if there is a shortage of it, which there obviously is, the prices are going to go substantially higher. These are the most confusing, dangerous times we've ever seen. My recommendations is to own the assets that you invest in. Let's just look at the stock market for a second this week. It's earnings week, so the stock market has been active, and the Dow Jones in the U.S. is approaching record numbers at 14,000. Do you realize that on Wednesday, when the Dow went up 50 points, it literally would have been down on the day except for one stock, which was IBM. How in the world, with all of the stocks in the market, does one stock, IBM, because it had great earnings report, move the market into a positive territory when most of the stocks were down that day? And then you saw the same scenario on Thursday when the stock market went up high, and that was because Netflix went up 44%. How in the world does a video rental company affect the overall stock market by that much? Again, it makes absolutely no sense to me. That's why I don't invest in those type of markets. I want to own my assets close to me. I want to hold them in my hand, and I want to be able to utilize them when I need them and not be held, in other scenarios like in paper assets. We own physical gold, physical silver, and diamonds. That's where all the money is going to be made over the next decade, and again, it will protect you against the onslaught of inflation that is coming, and believe me, inflation is coming in a huge way. The dollar is weak. They're printing dollars all over the world, which depresses other currencies, and when currencies go down, gold, silver, and diamonds go up, and that's what's going to continue to happen until a point where inflation is going to be so severe that the governments are going to have to raise interest rates like they did in 79 and 80 when interest rates went up to 22%. So let's be smart about this. We're not the Warren Buffetts and Bill Gateses of the world. We don't have billions of dollars in our bank accounts in order to, offset other situations. We're hard-working people that have put away some money and don't want to lose it. If you're in your 50s, 60s, or 70s at this point and you haven't put money away for retirement, look at diamonds and gold and silver in which to do that. The fact is that RSPs don't make any money anymore. The small investor does not make money in stocks. So let's be smart about this. Capital preservation is the smartest thing that we can do. Own the assets that we need. I like silver at this point. I like silver in the $31 level. I think that silver eventually will be triple digits and over $100. So again, Randy, we're heading into a very, very dangerous time. And as the governments, mostly the U.S. government, tries to find their way and figure out how to do this, all they do is get deeper and deeper and deeper into debt. And we all know, as Canadians, that are frugal and hardworking and put our money away, you don't increase your situation. You don't make your situation any better by borrowing and borrowing more and more money. Eventually, you're going to have to pay the piper. And if you're borrowing a ton of money and the economy is not getting better and there's not a lot of jobs and there's no new money coming in for the government, eventually it's going to fail, and that's what I believe is going to happen. Own physical gold, silver, and diamonds. It will get us through these difficult times and actually put us into a phenomenal cash position when interest rates go up. Then what we do is put our money in the bank, collect 10% or 15%, and say thank you very much.
Invest in silver, gold, platinum, palladium right now. Call 1-866-623-2002, 1-866-623-2002. The website, wwpmc.com. The company Harold recommends you use, Canadian company in business for over 10 years. The experts in this very specialized market, wwpmc.com, 1-866-623-2002. Get our free weekly newsletter from them. In the newsletter this week, we have our charts of the week, quotes and quick hits, information on diamonds, gold, silver, U.S. debt and deficit crisis, sovereign debt crisis, some news from Canada regarding interest rates staying at 1%, also the oil market and real estate. Get our free weekly newsletter from Worldwide. They'll send it out to you via email free of charge every week. 1-866-623-2002, their website, wwpmc.com, in our silver section of our newsletter this week. And I should mention, this was from Ted Butler. Goldcore out of Ireland picked it up as well. There are rumors that Apple is experiencing delays in producing the new iMac due to difficulties in sourcing industrial silver in volume in China. More silver than is typically used is utilized in the new 2.5 Apple iMac. Something to think about. We also have heard of shortages in the United States when it comes to silver coins. We're now starting to hear about it in Canada. Royal Canadian Mint starts rationing silver coins. We have two stories in our newsletter that you can take a look at. Bill Haynes, and he is a broker of gold and silver in the United States. He was interviewed by King World News, said as the silver shortage intensifies, more retail products disappear. It seems this week we had existing clients adding to their positions. It's amazing. These are people that already own gold at 300 and 400, silver below 10, and they are still adding to their positions at these levels. He is seeing strong buying. Keith Barron, he's been a consultant in the precious metals field for 40 years. He says, "This is what I've heard firsthand regarding the silver shortage. I spoke to a dealer where I purchased gold and silver in the United States. He just told me that immediately after the presidential inauguration, his firm immediately began selling the hell out of monster boxes of U.S. silver eagles." Obviously, people are very concerned in the United States about their guns being taken away. And now we have, obviously, with Obama being reelected, inauguration here just during the week, people are going into gold and silver as well. They know what's going to be happening, more printing of money. City analyst Tom Fitzpatrick, he says, silver is setting up for a stunning 56% surge. There's good resistance at 34.40, 35.40. And he says, more importantly, at 37.48, we get a close above that. We could see the highs back in 2011 of $50, a 56% surge from where we are today. Ron Rosen, he expects $233 for silver. That's a story you can read in our newsletter and take a look at the charts. Also, John Embry from Sprott Asset Management. He believes the gold super spike to be dwarfed by mania in silver. He said, the move in gold, as much as I love gold, will be dwarfed by the move in silver. One of the things underwriting silver is the growing shortage, as we have been reporting. What people don't seem to realize is the amount of physical silver that has been consumed in the world in the last 40 years is massive. There were massive above-ground inventories, particularly in China and the United States. It was a strategic stockpile in the United States. In China, it was all left over because they used silver to back their currency, so the world chewed through billions of ounces of silver. Now the inventories are way under 1 billion ounces in the world, and almost all of it is in strong hands. The world produces less than 1 billion ounces of silver each year from mining and recycling. That's less than 33 billion worth of silver. It's a rounding error. And he says it's 10 days worth of U.S. budget deficits. When you realize the world has chewed through all the silver inventories, it's obvious demand is a lot bigger than supply. The demand for silver, based on monetary considerations, is continuing to accelerate. So silver is going to be a huge home run. I think the realization that there is a shortage of silver will be what breaks the entire precious metals complex sharply to the upside. The physical market will take over from the ridiculous paper markets. Also, Egon von Greyer is out of Switzerland saying we are now seeing massive shortages of silver. Dan Norsini saying something substantially has changed in the silver market. He's talking about shortages in silver. Get our newsletter. Read those articles. Harold, we're starting to hear not only on the gold side, but the silver side, tightness in the physical market. Sure, there are paper players out there moving the price around, but the feeling is that big countries like China and India are letting them do it because they want to get all the precious metals they can on the cheap, and then eventually somewhere down the line, they'll drop the hammer, and we'll see the prices in gold and silver dramatically go up much, much higher.
You better believe it. You know, the fact is that it's very true that the articles that came out this week were so strong and very, very positive on what was happening with silver. And again, a lot of them were predicting substantially higher prices. And personally, I don't see any way that we're not going to hit it. Because again, there's shortages in the physical market, and there's inflation coming, and there's currency devaluation coming. So, again, it's only a matter of time. That's why we say not to trade the market. Don't go into the futures market. 90% of the people that trade that market lose all their money.
We have about a minute left here, Harold.
Okay, so again, we want to own the physical gold and silver market. I think the market is very heavily supported at $30, and that's exactly where I'd put some money at this particular point.
Good point made by Dylan Grice this week. If we print $1 trillion, we can now spend $1 trillion. We have absolutely benefited from this. We have $1 trillion that otherwise we wouldn't have had. But the question is, who pays for the $1 trillion? That's why you want hard assets. Speak with Worldwide Precious Metals, 1-866-623-2002. Their website is wwpmc.com. wwpmc.com, 1-866-623-2002. Going to come back and talk about diamonds and Harold's auction. HS Fine Auctions having an auction on Wednesday, January 30th. More information as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on January 25th, 2013. Our time is 9:01 Mountain, 11:01 Eastern. Radio show runs News Talk 1010 in Toronto. Also, QR77 Calgary, 630 CHED Edmonton. We are online. Hearing us, obviously, on Harold's websites, HESradio.com, rarecoloreddiamonds.com, on the radio, and we're really portable, on demand. You can take us anywhere via iTunes and our podcast. Go to iTunes. You can listen to us on your iPad, your iPod, your iPhone, your portable device. You can listen to our radio show at any time you want, on any device you want. The company Harold recommends you use when it comes to investing in hard assets like gold and silver, platinum, palladium, it's Worldwide Precious Metals. Their telephone number, 1-866-623-2002, a Canadian company in business for over 10 years. These are the people that Harold trusts. He recommends speak with them about starting your own precious metals investment account today. 1-866-623-2002. Website www.pmc.com. Get our free weekly newsletter. It's a must-read every week. The companion to our radio show. You can go through it in 5 to 10 minutes, even on your iPad or smartphone, and you'll be up to date. You'll know what's happening in the world financially. This week, we have an auction coming up. hsfineauctions.com with a special auction January 30th, 8 Eastern, 7 Central, 6 p.m. Mountain. We will get to the catalog here in a second, but first, our featured diamond of the week. And we're featuring yellow diamonds this week. It is a 1.34 carat radiant cut, fancy intense, yellow, internally flawless. It's absolutely stunning. See the picture in our newsletter. Go to rarecoloreddiamonds.com, the featured diamond of the week, and see the video. It is absolutely gorgeous. And we have some news from the past we wanted to remind you of, and that is a fancy yellow diamond ring that rarecoloreddiamonds.com was a part of putting together. It's a fancy, vivid yellow Asher-cut diamond. The value on it, $1.2 million. You can check it out. It's a stunning diamond at fancyyellowring.com. We also have information from the Wall Street Journal, 2 stories, the new color of luxury, yellow, and yellow diamonds are a girl's best friend. Harold, there is a big yellow diamond that will be up for auction coming up on Wednesday. It's a Tiffany yellow diamond.
You better believe it. It's in a Tiffany setting. I'm so excited about this auction. I know a lot of people have been waiting for it. It is the first one of the year. And if you go on hsfineauctions.com, hsfineauctions.com, and click on catalog, you will see what is coming up for bid. So what happens is that the auction is coming up on the 30th, which is on Wednesday. It's going to be 8 o'clock Eastern Time. It'll be 6 o'clock Mountain Time. And the auction is live. This is the only real-time live auction site ever built. We built this for our clients to resell their high-end collectibles. It's never, ever had this type of market before, so we created this market. This is our 9th auction coming up, and they've been very, very successful. We've sold 90% of the items that have come up for bid. So if you look at the catalog as to what's being offered, there's a magnificent silver Tiffany coin. There's some beautiful gold and silver coin sets. Actually, my favorite is the Prestige Natura Black Rhino gold set. It's 24 karat gold. It's a 1 ounce, half ounce, quarter ounce, and 1/10 of an ounce of pure gold. It's a numbered piece. It's absolutely spectacular. It's one of my favorite sets ever. And then there's also a Libertad, a Mexican Libertad coin. It's silver, 0.999 silver. It weighs a kilo, 2.2 pounds, and it is spectacular. This particular one is from 2003. It's one of the rarest ones ever made, and I know Randy loves it. I love it. It's displayed in my home. Wait till you see this piece. But what Randy was talking about is the first diamond to come up for bid on Wednesday, January the 30th, will be one of the rarest diamond rings. It's a 1.41 carat radiant cut, which is a square cut diamond. It's fancy yellow, which is a phenomenal color. It's internally flawless, which is the best clarity grade. And it's in a Tiffany ring. A Tiffany ring. This diamond ring in New York would sell for $80,000 to $100,000. The starting bid is going to be $20,000. It's not only one of the most beautiful yellow diamond rings you'll ever see, it's a phenomenal investment that will do nothing but go up in price. Then after the Tiffany diamond ring, we are offering 8 Argyle pink diamonds. Argyle pinks are amongst the best investments you could ever make. The Argyle mine in Western Australia produces 95% of the world's pink diamonds, and that mine is about to close in 2018, which is 5 years from now. Give it 2 years for these diamonds to totally run out, and these Argyle pink diamonds will increase in price approximately 8 to 10 times what you paid for them. 8 to 10 times. The first diamond, Argyle pink diamond, coming up for bid is going to be a 36-point heart shape, one of the rarest cuts, fancy orangey pink Argyle diamond. The estimated value is $30,000. The starting bid is going to be $10,000. This diamond in 10 years from now could be a $300,000 diamond very easily, because if it follows what blue diamonds did, we should see an 800 to 1,000% return on these diamonds over the next 10 years. Round diamonds are the rarest of all cuts. There's a 29-point round fancy pink Argyle diamond. The estimated value is $40,000. The starting bid is going to be $15,000. These diamonds are going to be bid on very heavily from all over the world. So don't forget, these diamonds are amongst the best investment diamonds that you could ever invest in. They never lose in price. They double in price every 4 years under normal market conditions. But again, because the mine that produces them is shutting down, we anticipate that the prices will skyrocket. If you're looking to retire with some money, and if you look at what's doing in your RSPs, you'll realize that the small investor has no place in the stock markets at this time. They're just way too volatile, way too risky, and it's very difficult to make money in paper assets. But a diamond never declines in value, doubles every 4 years, and because of supply and demand, where the demand is extremely high and the supplies are minuscule, these diamonds are amongst the best investments you could make. On top of that, with currency devaluations coming, these diamonds can be sold in other currencies. We do auctions in London, for example, and they're very popular because the British pound is worth 45% more than the US dollar. So the people in London that buy our diamonds buy them at a huge discount. So again, for our clients, we built this for you. When you sell your diamond through my company, hsfineauctions.com, we get 10% of the profit only. If you buy a diamond for $40,000 and sell it for $400,000, we get 10% of the profit only, and you get all the rest. No other competitor that is in the diamond business has what we have. We have the majority of Argyle pink diamonds for the next several years because we invested heavily in them and put our money up front. So you're going to see over the next few months the lion's share of Argyle pink diamonds in the world. And again, we do this for our clients. These are the safest and most profitable investments that you could actually invest in. So the rarest cuts for diamonds are the rounds, the heart shapes, and the emerald cuts. And again, there's 8 Argyle pink diamonds coming up for sale. You can see the videos on each one of them. They're spectacular. The last diamond, by the way, is a fancy intense pink heart. When you look at the video of this diamond, you will not believe how magnificent this diamond is. Its estimated value is $60,000. The starting bid will be $20,000. And again, what you want to do is you want to sign up and go to hsfineauctions.com. HS for Harold Siegel, fineauctions with an S.com. You go to the site, and then you register. You put in your password, and we will give you permission to attend the auction. And then what you do at 8 o'clock Eastern, 6 o'clock Mountain, a couple minutes before or 10 minutes before, go on the website. You'll see a clock ticking down, and at exactly the right hour, 8 o'clock Eastern, 6 o'clock Mountain, I will come on, and this is a live auction. It's not like an eBay auction where you type in your bids. I'm selling every single piece. I think as investors and potential investors, you'll understand how amazing this site is that we build, and it will literally change the diamond business. And again, we built it for our clients that invest in rare color diamonds.
So once again, hsfineauctions.com. Next auction, Wednesday, January 30th, 8 Eastern, 7 Central, 6 Mountain. And Harold, we should go through the catalog because you mentioned the Tiffany diamond, which is a stunning diamond, but we have some gold and silver sets as well. And these are sets that you've had from the past that are very, very coveted. And this is a rare opportunity for those that might have thought they would never get an opportunity to own one of these, invest in them, to have a crack at it. We have a Louis Comfort Tiffany silver coin. And this is stunning because it is a pure silver coin with a stained glass window. Now, the estimate on it, the starting bid will be $300, the estimate on it $1,000. In the past, when you have offered that coin, you've only had a few. There has been a fierce bidding war for that coin because it is so stunning and has that stained glass window,
which is so valuable that if you look at what Tiffany pieces have sold for at auction, they sell for way higher than the estimated value. In fact, if you look at the auctions lately over the last couple of years, with the currency problems and all that type of thing, diamonds and gold and silver pieces that have sold at auction have sold for sometimes double and triple what the estimated values are. So again, we anticipate the bidding to be fierce on that Tiffany silver coin. Let's face it, to own anything from Tiffany is a real coup. To own this particular piece, very few people in the world will ever get a chance to own one. There's a 2003 mini Outback collection, which is silver, gold, and platinum coin set, which is magnificent. They all have certificates of authenticity. These do nothing but go up in value. You want to own some of these pieces. They're magnificent. We have the Pope's 25th anniversary coin set, which is magnificent. Estimated value $650. The starting bid will be $350. We try to have something for everybody. Again, not everybody will be able to afford $20, $40, $50, $60,000 diamonds, but for example, the Pope Prophet of Peace silver coin is estimated value at $250. The starting bid is at around $200. It's just an amazing piece, something that you'll never ever get a chance to own. This prestige set from South Africa, the Nature Black Rhino set, is a numbered piece. Its estimated value is $4,000. The starting bid is $3,000. When you see this piece, it's the most beautiful gold coin set you have ever seen. This is my own personal set. In fact, most of these sets that are coming up for auction are my personal collections. The reason is nobody's selling right now. None of our clients are selling their gold, and none of our clients are selling their diamonds. So these are sets that I've had put away for many, many years, and again, are bringing them up for auction. Not that I want the money. It's just that I want to get the website, the auction site, active worldwide. And we hired a PR firm, one of the top PR firms, and they are doing a phenomenal job. We've been picked up by over 300 news agencies all around the world for this auction alone. There's a 2004 Year of the Monkey 1-ounce typeset coin collection, estimated value $550. Starting bid is going to be $350. We've had one of these sets that have come up for auction before, and it is absolutely magnificent. It's all pure silver, 0.999, but they're painted pieces. Then the Libertad, which again is one of the most amazing pieces of all time, and this is one of the rarest ones of all because it's from 2003. It's a kilo silver coin in an amazing display case that you want to display in your home. Estimated value is $3,000. Starting bid will be $2,000. This is a coin that will sell for more than the estimated value. Then we have that Tiffany coin with the Tiffany ring with a fancy yellow, internally flawless 1.41 carat ring. It will take your breath away. Anything with Tiffany goes up tremendously in value. Look at the GI report and video. You'll be blown away. Its estimated value is $80,000, and that's probably low. This diamond ring in New York would sell for over $100,000. The starting bid is only $20,000. I expect the bidding to be heavy, and then there's 8 Argyle pink diamonds. This is one of the best auctions that we've had. I'm very excited to bring it to you. Make sure that you see it, and even if you don't want to bid, you just want to watch as a spectator, you still need to sign in. But again, you don't have to bid if you don't want to. Just watch the first one and see if this is for you. I can pretty well assure you it's so exciting, you'll want to bid on something, one of the coin sets or one of these magnificent diamonds, including a Tiffany ring that is worth almost $100,000.
Valentine's Day is coming up, and there is a 0.36 carat heart-cut fancy orange pink diamond. And this diamond, you can see it on the website, hsfineauctions.com. Go to the catalog section. It is a stunning heart-shaped diamond. A perfect gift for Valentine's Day, an engagement. Most people would be stunned with one of those in an auction, but oh, wait a minute, there are 2. There's a 0.36 carat heart-cut fancy intense pink diamond, and it is absolutely stunning as well. We have other diamonds, pink diamonds from the Argyle mine, a 0.29 carat round brilliant cut fancy pink diamond, a 0.30 carat round brilliant cut fancy purplish pink, 0.31 carat radiant cut fancy pink diamond, 3.7 carat round brilliant cut fancy pink diamond, also a 3.30 carat radiant cut fancy intense purplish pink, radiant cut fancy intense pink diamond, 3.1 there, 0.31. But those heart-shaped diamonds, if you've always wanted one of those for an engagement or a Valentine's gift, Harold, the auction is a must-attend event, because the prices we've found obviously are very, very competitive, and this is a great opportunity to make that investment in that diamond that you want.
You bet. Again, you'll never see heart-shaped diamonds. They showed up in the tender this year, excuse me, and they sold for absolute fortunes. So, again, these were diamonds that I've owned for the last 10 years. I've put them away for, my own retirement type of thing. But again, it's so imperative that we get worldwide recognition for the site, because again, it's so important what we built. We built the only secondary market to resell these. I mean, we all collect things, whether it's hockey cards or we collect art, or we collect stamps, or we collect gold, or we collect anything. We're collectors. People love to do that. But you eventually want to sell them. And we're the area that we want your business. So again, this is a very sophisticated website. It took us 2 years to build, and it is phenomenal. And it's live, it's exciting, and I sell every single piece. So again, the next auction is on January the 30th. That's a Wednesday evening, 8 o'clock Eastern, 7 o'clock Central, 6 o'clock Mountain, and again, attend it and enjoy. You're going to see one of the most amazing experiences you've ever seen before.
And I think the key is, as we've said before, you do not have to bid. You can sit back in comfort. You sign in, you sit back in comfort, and just see how things play out. And I think you'll get an idea of what's involved, build your comfort level up, and then at that point, you can take a look at bidding. But this is a must. Obviously, this is the first auction for 2013. It's a must-attend auction, hsfineauctions.com, January 30th, 8 Eastern, 7 Central, 6 p.m. Mountain, hsfineauctions.com. You can take a look at the beautiful catalog that is online. And if you'd like to connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com, the telephone number 1-800-432-1022. When you take a look at what's happening around the world, as we touched on a little earlier in the show, the United States, they raised the debt ceiling. It was a short-term fix. There's talk, Greg Hunter, formerly with CNN, he interviewed Carl Denninger. And the feeling is the United States could get another downgrade on their credit rating. And that's when we really saw gold and silver take off, when they were downgraded the last go-around. Also, there's talk of currency wars, some severe concerns as to what's happening around the world with potential currency wars. We have the quantitative easing happening in the United States, the Bank of Japan coming out and saying this week they're going to start doing it in 2014. And Harold, it's just a time where people need to be very aware what's happening, because as quick as you earn your money, you can lose it depending on the market that you're in.
You better believe it. And we've seen it happen before. I mean, it happened in 2008 when most people didn't see it coming, and the Dow dropped from 14,000 to 6,500, and it's now 2013, which is 5 years later, and the markets are just getting back to where they were. So again, every market has its time. A lot of people remember the 90s when they made a lot of money in the stock market. Then at the end of the 90s, when the dot-com companies plummeted, and Nortel, as an example, dropped from $125 down to 50 cents, then people started to realize how risky those markets are. By 2008, again, they had made back some of their money, at that point. Then the markets plummeted again. And now there's reports that the markets are going to plummet one more time. We've read for the last couple of weeks an article called Billionaires Dumping Stocks, Economist Knows Why. Again, you got to read this article. If you didn't get it, just contact me and I'll send it out to you. This is all information you need to know. You need to know what's going on, where the smart money is going. And again, it doesn't matter how much money you have. The dollars that you have are extremely important to you. And what we want here, Randy and myself, is for the listeners to our show to be able to get through these difficult times and not to lose their money. And the fact is, if you're 50, 60, or 70 years old and you remember 2008, you do not want to go through that again, because the chances of making your money back this time are slim to next to none. If you don't want to sell it of your stocks and your paper assets, there are certain diamonds that are negative correlated to the stock market that will hedge you or protect you. If you lose on your stocks, you'll make on your diamond. You need to own some physical gold and silver, mostly silver. The price is greatly undervalued. It should be triple what it is right now.
It was interesting over in Davos, Switzerland. They've had the economic conference. Bloomberg has been covering it, and Mark Faber was quoted as saying, "I'm prepared to make you a bet." And he was saying this to another financial expert. You keep your U.S. dollars and I'll keep my gold. We'll see which one goes to zero first. Robert Fitzwilson, who's been in the investment business for 40 years, said the West went over the spending cliff decades ago. An economic and financial blue screen of death lies in waiting. The only question is what triggers it and the timing. Attempting to answer those two questions is trying to figure out what an improperly programmed computer could do given the wrong set of keystrokes. It's an impossible task. So what investors need to do is focus on the appropriate asset allocation for the present and what opportunities will arise on the other side of this mess. Is this negative? No, it's just the facts. Most people try very hard to ignore and shun the reality that surrounds them. Those who want a fighting chance to survive and prosper through the coming maelstrom must focus on the real assets that we and others have been highlighting for consideration, gold and silver in particular. And Harold, we have about 3 minutes left in our segment. We've obviously talked about diamonds since 2005 as well. We'll add to the list diamonds. But I agree with him. You do have to have an asset allocation in your portfolio that takes into account what's happening around the world in unexpected black swan events that we could wake up one morning and find out that suddenly Greece has left the Eurozone. Or maybe the UK, they decide to vote and suddenly they leave the Eurozone. These things all will have an impact, and you need to have an asset in your portfolio that's an insurance policy.
No, you're 100% right, Randy. The thing is that you need to diversify to make sure that you don't have all of your eggs in one basket, and that if something does happen, that you don't lose all of your money like happened in 2008. So diversification is extremely important. You know, we're prognosticating what is going to happen over the next few years, but again, you know, these markets have a mind of their own, and they do what they're supposed to do. We analyze them. So far, we've been fairly correct and done a good job. But again, what's coming up in the near future could be very, very dangerous. And all we want for our clients and listeners is for them to be situated in the markets in the right way so they don't lose all of their money. And it's called hedging your position. And again, we'll certainly willing and able to sit down with you and explain to you what you need to do to get through these extremely difficult times, and more than likely, you know, come out making some money from it, which is the idea.
We have some stories in our newsletter that are a must-read. You can get them from Worldwide at 1-866-623-2002, their website, www.pmc.com. And it's on the geopolitical front. China already has a plan to sink the U.S. fleet in any upcoming battles. 5 new reasons China and Japan may go over to war over the disputed islands. Also, Australia established an office to combat cyber attacks this week. The a U.S. general says Iranian cyber attacks are retaliation for the Stuxnet virus. Iran says basically a war is the only thing that can stop them now. So it's something that we haven't really touched on, but geopolitical is a concern as well. And that's another scenario, and we only have about 30 seconds left here, Harold. You wake up one day and find that Israel said, listen, we're not waiting any longer. We're going to attack. We feel threatened by Iran and a nuclear program, and suddenly the world is turned upside down.
It's frightening, Randy. All those political situations, including North Korea firing, nuclear missiles, it's a hotbed out there. There's just so many things that we can't even reach it and talk about all of them within the hour that we're on. So, again, get the newsletter this week. It's loaded with great information. I want to wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecoloreddiamonds.com. Telephone number 1-800-432-1022. HS Fine Auctions. Auction coming up Wednesday, January 30th. Be a part of it, 8 Eastern, 7 Central, 6 p.m. Mountain. And connect with Worldwide Precious Metals. Now, more than ever, you need your own precious metals investment account. Speak with them about investing in gold, silver, platinum, palladium. 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.